Success is about doing the right thing, not about doing everything right. Gary Keller, my friends, each and every day, 10 to 15 minutes focusing on Heikin-Ashi candlesticks, volume, and your trend line. Let's jump into these charts. We saw things spring up in the morning on both the S&P 500 and the NASDAQ 100, then roll down strong in the afternoon. If you look at our chart, we did not hit the 502 entry point level we told you about yesterday. Now, we did see that things sprang up to the exit point of 520. So even if you jumped in wrong, of course, you had the opportunity before it hit 524 and then rotated over and hammered down in the afternoon to a low of 489.16. Looks like the close was 486. So, in fact, it was lower than, it moved up some from the 489, but looks like we closed at 496.48. So, again, probability, as we told you, was not that great for moving up. It was only 60%. We weren't super excited about it. Now, we're rotating back over, though, today into bearish territory, 60% probability of continued bearish down move. Entry points up a little from where we are right now. It is at 498.11. Exit is at 480. And again, we're looking at $18 or so in expected down move. Backtest accuracy is 75%. So the probabilities and the backtest are getting higher as we revert to the mean, right? Again, when you see these small pop-ups, gives you a bit of an opportunity, but you're betting against what? You're betting against the weight of this strong down move. Look at all the volume. We're just at Tuesday. We're already up to above average volume as things crash down. How many of you are doing your practice trades on SH, which is, of course, the single inverse of the S&P 500 as it spikes up? We urge you to practice trade these inverse funds, learn what they're all about, understand inverse funds. They are not the perfect way to trade. Of course, we'd rather be buying something going up that is the equity itself rather than this derivative. However, it does offer you opportunities when everything is jamming down and everyone's fleeing and running for cover. It is beautiful. So that is where we are on the S&P 500. Let's move on to the NASDAQ 100 as we look at it. Again, not much of a probability yesterday, about 60% of an up move as we look at where things started the day off. We said our jumping in point was around 422. Didn't get that low. Did it get up to the 440 jumping out point? It looks like it did. It hit a high of 443. So again, I don't like short trades. I like long trades. I don't like 60% directional probabilities. I tell you guys always, I like 75, 80%. That's beautiful. We don't usually see 85 or 90%, but we do see 80, and I like the 80. Now, where are we on the S&P? Well, the NASDAQ 100, as we move into Wednesday? We are bearish 65%. Yesterday we were 60, now we're 65%. Again, not super excited about where things are there. We'll see if indeed it does roll over, if there's some news. And again, this is a news trade, popping this stuff up. Not anything I am super excited about. But again, you can see how the market portends things happening as it did on Monday, where it dropped so hard and then recovered in the afternoon, then popped up on Tuesday, and then started to roll back down again, going in the direction of the weekly chart. The trend is your friend until the end when it bends. Well, it's not bending yet. It's just collapsing with lots of volume and speed. Where are we on 20-year U.S. government bonds? Now, yesterday, again, another toss-up. We were 55%, so about even. With it going up with a measly 60% backtest accuracy. Didn't recommend anything there. What did it do? Well, it went the other way with the flip of the coin. It went down 1.98%. Not super surprising. I mean, we've got a red spinning top here. Had things pop up this last week, but then start moving over. You can see where the Monday, Tuesday, 2-day candle sitting right there on that very, very weak trend line. The half day on the last 2 days has slammed down through it. And again, we'll keep our eye on things. Where are we? Now we've gone from a 55% just about, halfway to up, halfway to down. We're now moved into bearish territory. 80% directional probability going down. Your entry point, 89.33. Your exit point, 85, about a $4.33 move that we're looking at. The backtest accuracy is at 85%. Now, again, friends, when you are looking at these types of potentials for jumping into a down move, it is important that you look for what? You want to make sure that you jump in at the right point. You want to see a red down candle with volume that's leading you there in the right direction. Pay attention to both your entry and your exit points. And also, you don't have to sit here at home writing down all these numbers. If you subscribe at chartingwealth.com, we put the trade execution summary grid in the show notes every day that's emailed to you. So again, doesn't cost you anything. We don't spam or sell that list. Go to chartingwealth.com, sign up, get this information on a daily basis. We give you the ticker of the ETF. We give you the directional probability and percentages. We give you the entry, the exit, the expected move in dollars, and the backtest accuracy. Again, we're not a stock calling service. We're an education firm. We want you to practice trade with us. Learn by practicing this. Let's move on to gold. Where were we yesterday with gold? We were 70% directional probability of an up movement. And we're seeing over the next 5 days about $6 in up movement, 75% backtest accuracy. We were up just a little over 0.5% for the day, closed at 275. Now again, with gold, as we move into Wednesday, we do say that directional probability slowing down, only 60% bullish. The entry point's 275.20, where we are with the market closed now. The exit point, 285, about a $10 up move, 65% back test accuracy. If you are in that trade on gold, just again, keep in mind, I would just urge you, keep in mind, we did break that up move, those weeks and weeks and weeks. We're now red down candle. Look at all the volume. Look at the two-day candles, the latest one pushing through, closing below that weekly trend line. And of course, you can see where the half day has been below it now for 2 days. So just keep your eye on the prize and realize you got some weight pushing things down. Lastly, we'll go to Bitcoin. Bitcoin, we're 70% bearish. Yesterday, we were pretty much break even either way. Today, with that down move of 1.68%, we are bearish, 70% directional probability. We see about a $2 move down over the next 5 days plus. Backtest accuracy is 75%. So again, just to sort of wrap things up for you, let me give you a trend summary. The broader trend on the weekly chart is bearish on the S&P 500 after a significant reversal confirmed by the 2-day chart. 195-minute chart hints at a short-term bounce but lacks strong conviction. What about the NASDAQ 100? Well, the trend summary on this one is bearish on all time frames with a possible short-term bounce on the 195-minute chart. What about 20-year U.S. government bonds? Our trend summary is bearish on all time frames with a weak short-term reversal. So keep that in mind. And again, it was down pretty strong for the day. Let's see, it was our biggest downer actually at 1.98%. What about gold? The trend summary is bullish on the 1 week and 2-day charts with a short-term correction on the 195-minute chart. Remember, the weight is for a down move. And Bitcoin, the trend summary is bearish on all time frames with a weak short-term reversal signal. That is where we are as we end the day on Tuesday and go into Wednesday, the 9th of April. God bless, my friends. All the best from the whole team at Charting Wealth.